Thanks for joining us. I'm Marlon Bowling with you here on the Market Day Report. We're watching your grain and livestock market activity, and we've been talking from time to time about the new crop progress and condition reports that came out from USDA yesterday. Well, I know Mark has gone through some of the key crop numbers, such as corn and soybeans. They both showed declines yesterday. Wanted to zero in, if I could, on the Dakotas. So much interest in the Dakotas, and wanted to take a look at what the crops have been doing in South Dakota and North Dakota. So let's go take a look. Here's a look, first of all, on the screen, if you're viewing at home, at conditions in North Dakota. So let's zero in on this here for a little bit and see how the numbers fared this past week. On the corn, they rated 52% of the crop good to excellent, down 3 percentage points from the week before. Soybeans 47%, that would be down 1 percentage point. In the spring wheat, they went down 5 points. Once again, 36% here the last week. And the pasture land was only 9%, good to excellent. In the state of North Dakota, that was down 4%. In South Dakota, let's take a look there. In the corn conditions, 37% rated good to excellent. That was down 5 points from the previous week once again. Soybeans, 34% was down 2 points. Spring wheat, only 10% rated good to excellent, down 1 point again from the previous week. And pasture land at 14% good to excellent, down 3 points. So lots of downward arrows in the Dakotas on crop and pasture land condition last week. Let's go check in with Brian Hoops. He's the president of Midwest Market Solutions in Springfield, Missouri, and he joins us right now. And Brian, as we take a look at the grain trade, how much of this is related to positioning ahead of the government reports coming up tomorrow, and how much is related to the rain that occurred last night?
Well, I think the market opened a little stronger yesterday or in the evening hours based off of the crop condition ratings. They fell a little bit more than what the trade had anticipated. And then we saw some rain showers overnight that moved into eastern part of Nebraska, west central Iowa, where it's been very dry, and moved into Illinois. Now it's actually becoming almost flooding in parts of Indiana. And so that's really too much rain right now. But we are seeing, a soybean market in November, beans had rallied about $1.40 in 10 trading sessions, closing higher that entire time. It's due to have some sort of a little correction. That correction came after we made new highs overnight and pulled back because of the rain showers that were a little unexpected. So I think this is kind of just a little healthy correction in here. If we would have some sort of an outside reversal, that's going to weigh on things going forward. We had one in Minneapolis wheat about a week ago, and prices have really never recovered fully from that technical loss. But most of the eyes are on the weather. Very little reaction is what is expected out of tomorrow's report. The USDA in the last 24 years has only changed soybean yields 5 times in that entire time frame. So I really don't look for much of a change in tomorrow's report, but we could see just a very small reduction.
All right. Soybeans have been trading on both sides of unchanged today. We have the August contract just a half higher now at 10.25 1/4. So as I mentioned, both sides of unchanged today, getting ready for the reports tomorrow. In fact, November is unchanged at 10.39 1/4. Let's go back and check that corn, see what the prices are right now. We have the September down 2 3/4 at 3.99 1/4. However, that's about a nickel off of its early low today. And December down 3 at 4.11 3/4. Checking on that wheat trade, where everybody's been very concerned this week. September Chicago wheat now down 3.5 at 5.46 1/2. What about Kansas City wheat? Well, September there is at 5.52. That's down 5 1/4. The Minneapolis wheat, which has had the biggest swings by far, almost steady. September down 1/4 cent, and December up 1.50 now at 7.92. So straddling the fence here in the Minneapolis wheat trade. We'll be back talking more with Brian Hoops. We'll talk about the cotton and livestock trade when we come back. And again, just a reminder, tomorrow USDA will come out with their crop production and their supply and demand report numbers. They come out at 11 o'clock Central Time right during the trading session. And we will, of course, see immediate impact, and we'll have coverage right here on the Market Day Report after those numbers come out. Wanted to touch on that cotton market, see how the prices are holding up at the present time. Let's go to the board and see how the October contract is doing. It's down again today, down 64 points at 67.08. It's had a tough go here this past week. December cotton down 5 points right now, and it stands at 67.25 $1.24 per pound. Let's go back to Brian Hoops. He is the president of Midwest Market Solutions. He's based in Springfield, Missouri. And Brian, let's get your thoughts on the livestock trade today. What do you think is going to be driving the market here?
Well, the cattle market is, certainly reacting to expectations. We're going to see lower cash trade again this week. We've had declining box beef values along with declining packer margins and increasing supply. So it's a bad time of the year for this cattle market. Rallies like we're starting to see here now, I think are going to be sold by this cattle market. We've really narrowed the discount between the cash and the futures. And so that's not such a limiting factor. And when we have traders, specifically the funds are holding some bang debt long positions, they are likely to start to abandon the long side in here as the technicals and the fundamentals turn lower. So a little bit of a reaction with the feeder cattle trading higher to lower corn prices that have been seen so far this morning. Interesting.
The feeder cattle that we are showing on the screen right now, and I'll run through some prices here for our radio listeners too. August feeders currently 82 higher, 145.50. That's on the high of the day right now. And September 77 higher at 145.45. So just a couple of ticks under that. And that also happens to be on the high of the day, as Brian was just pointing out, a little rally here today. On the live cattle side, let's revisit that. We have August 33 higher now at 114.15 per hundredweight. October up 53 at 113.95 right now. On the lean hog side, let's go over there. And on the lean hog futures, a firmer tone here on the nearbys. We have August now 58 higher at 82.58. That's within about, 15 cents of its high of the day right now. We have October up just a nickel at $70 even. Real quickly here, Brian, that correction we have seen in the hogs, is that temporary or is that a longer term thing, do you think?
No, I do think it's more of a temporary correction. You look at the cash market and lean hog index, we're trading up around 92.75, almost 93. And July needs to stay very current to that as it expires against that index next Monday. If you look at the August, it's holding a huge discount to the cash index. So either the cash is going to have to fall out of bed over the next several months, or August is too heavily discounted and needs to come up to where that cash and that index is currently at.
All right, thanks for the analysis. Appreciate it very much. Brian Hoops with Midwest Market Solutions in Springfield, Missouri. Thanks for joining us. Look forward to talking again soon. So there's the latest. Livestock a little firmer today.
A little firmer so far.
So far.
Okay, we'll keep watching it. Thank you, Marlon.
You bet.